What is good, Tesla family? It's Ray J back with another video. And in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why the overall market did have a bit of a sell-off today and how this could affect Tesla. I'm going to break down some very important articles, what's going on with the Fed and inflationary data, and how this may affect the FOMC meeting and the overall market going forward. I'm also going to be breaking down why there may be a fake out rally one last time in the markets before we get an even bigger sell-off very soon. Now, before I break anything down, before I get into any more details, I do have to say a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each valued between $3,000 and $3,000, and the offer ends in just one day. So check it out before they run out. With that out of the way, let's get on with the video. So Tesla was down about 6.32% for the day. In my previous video, I predicted that Monday could be maybe like a flat day, and then for Tuesday, I thought the market would actually sell off. And instead, the sell-off came a little bit earlier than expected, right? And that's completely fine. But now, I want to note something else that's very important. If you watched my previous videos, you guys were prepared for some potential downside because of all the divergences on the markets. But now we are seeing some signs that the market might try to do something very tricky to trick lots of people into the market makers so the market makers could actually get lots of that option premium. I'm going to show you guys that in a couple of minutes. But first, I want to talk about the Fed. So, what's going on with FOMC? That's one of the questions on a lot of people's minds. And the answer is the Fed is really incentivized to be quite hawkish, in my honest opinion. Now, right now, data is coming out for January inflationary data, which is going to be released on February 14th, which is Valentine's Day. And right now, many Cleveland Fed officials are saying that the data might be a little bit higher than expected, maybe a little bit high. They are seeing core inflation actually coming in at around 0.5% month on month. So people are thinking that inflation might be going up to start off 2023, and the first report to show it may come out in about 2 weeks. So we're not the only ones that know this, right? The Fed is actually on top of this. And Jerome Powell knows that this is a real possibility. He also knows that the Fed cannot risk pivoting way too early. So, all this news about the Fed pausing, the Fed starting to pivot, the Fed slowing down, a lot of it, in my opinion, is malarkey. Because I believe the Fed is being incentivized. When looking at data like this, the Fed is going to establish their dominance. They're going to let the entire world know that, look, inflation is still a big issue. They're not giving up. They're not easing just yet. And we're still going to see more tightening of financial conditions. We're going to still see the Fed continue with their policies and the rate hikes the way they have been. On top of that, the terminal rate is likely going to be higher than what the market is pricing in, what the market is expecting. I'm talking about the total rate. I believe the Fed is not going to stop at 5%. I believe we're going to get at least a 5.25% terminal rate, maybe even higher. I mean, I don't know for sure. It depends on the data, but that's just what my point is. This opens room for a possible 50 basis point hike. If not, maybe we get three more 25 basis point hikes, right? But either way, it is still very possible, and that could really shock the market. All right, so please be very prepared for that. FOMC is going to be once again on February 1st, which is this Wednesday. Powell is going to be speaking. I'm going to talk more about it tomorrow, but I also want to talk about some earnings. We have ExxonMobil, we have AMD, all coming out for tomorrow. We also have McDonald's and a couple of other ones which are kind of significant. Wednesday is going to be a little bit bigger when we have Peloton, T-Mobile, and Meta. And then Thursday is going to be huge as we have Amazon, Alphabet, Apple, Ford, Starbucks and Sony and a bunch of other ones. So it's going to be absolutely massive, guys. You have to be ready for this. This will really dictate how the market moves going forward. And so far, earnings for Apple, for instance, are not looking that great. We are seeing phone sales down significantly for Q4. So we'll just have to wait and see. But as of right now, I want to prepare everyone for that. Now, for Tesla had a big increase in the price pairs ratio right here because Tesla has been outperforming SPY, but now it's starting to come down. It's starting to dwindle to the downside a bit, which is now showing some relative weakness. Now, you can see right here, Tesla's very vertical. It was pushing up super hard off that earnings, and now we're starting to reverse in the markets, and this is starting to slow Tesla down. As Tesla began to slow down, we saw the QQQ actually take a bigger hit. And I think that the ratio did not actually come as down as hard relative to the QQQ. So now the QQQ is being dragged down by Tesla, and we can actually see the impact that the stock can have and how much Tesla is dropping more. Despite that, we got some more buy ratings from Berenberg and other analysts. So very awesome. I do believe that whether you buy this thing in the 180s or the 100s, it's still a very, very good buying price compared to the super long term when this thing could go to the 400s, the 500s, the thousands. So I'm still very optimistic, but I also believe, in my honest opinion, my non-financial advice opinion, that if you're going to dollar cost average from this point on, you may have more opportunities to come as Tesla will likely see more downside, in my opinion. I'm going to break that down in a couple of minutes. Looking at some seasonality data, Tesla tends to be green only 50.69% of the time on Tuesdays. Now, I also want to note a trend in Tesla, and that is when Tesla opens up, it tends to be very slow compared to the market. Tesla opened up today, it was pretty flat, then it slowly started dropping and dropping and dropping. And as the hours passed, it started dropping even harder. So it's a very slow starter for the day typically, and it tends to become more aggressive, whether it's like selling off or pushing up as we approach like 11 a.m. Eastern time and beyond that time. So I just want to note that trend. We could see something like that for tomorrow. February is historically a very bad month for Tesla. We're only green about 33% of the time on February's historically. This is also because of a typical trend that happens in the markets, as Februarys are not always the best of months. And on top of that, you could also argue that there are lots of slowdowns that happen. And there are other big factors too. But I just want to note that Februarys are not always the best months for Tesla. They're typically not that great. And finally, one thing that's crazy about Tesla is the short interest has absolutely skyrocketed to the absolute moon. This thing is up like crazy. We saw millions of Tesla shares being shorted. As of Friday, it was like 54 million. The day before, it was only about 29 million. So it almost doubled in one day. Pretty crazy stuff. Now, I want to note that looking at the volume, it came down a bit. It's only at 229 million, which is actually above the average volume, but it's much lower than what we saw last Friday and the days before that. We were actually seeing like the 300 millions. We're now in the 200 millions. And on top of that, I want to note that the majority of the volume today was being made up of selling volume and short volume. So the shorts are getting the edge over the volume, and they're doing what they can to bring this thing down. So we are seeing more relentless shorts coming in. Now, a lot of people were talking about the Tesla Model Y over the weekend and the inventory levels. They're actually starting to stagnate as of right now. So the whole like price cuts, yes, they actually helped demand come up, but now it's starting to show signs of slowing down a little bit more because the backlog is getting smaller to some degree. So I just want to note that things could come in the future that change. Could there be more price cuts? It is possible. Am I guaranteeing it? No, but I just want to note that, be prepared just in case. Now, for Tesla, let's talk about what's going on. I also want to note that I'm not going to be talking as much about Tesla's its fundamentals over the next couple of days because right now the bigger thing dictating it is the overall market, the data, and also the Fed and earnings, right? Those are the biggest things right now for the next couple of days. That's why my priority is going to be this. So Tesla is down about 6%. It actually sold off with the market. If you watched my previous videos, you should have been prepared for this. I did say that during the earlier days of the week, I anticipated a sell off. I wasn't sure about Monday or Tuesday being the day, but I was kind of aiming more towards like Tuesday. It actually happened today. So very interesting stuff. Now, what is likely going to happen from this point? And I want to note that the S&P 500 has a very interesting formation, which could actually, in my opinion, dictate Tesla. So one of the things I want to note is that we do have a possible head and shoulders forming. And there are two ways it could end up forming, in my opinion. In order for it to form, the market will have to have more selling than a rebound, right? And when we rebound, the real question is what could be the thing that triggers it? And I'm not really sure if it's going to happen on Wednesday, right before Powell is speaking, or if it's going to happen tomorrow. But one of these days, okay, I think there might be a rebound and it might be a fake rally. We have this gap right here left on SPY that's unfilled. There's no guarantee we fill it, but there is a chance we might try to fill it before we end up coming down. But you know what the ultimate result is likely going to be, in my opinion, and that is a big sell off very soon. Let me explain exactly what I'm talking about. So, tomorrow, okay, there are two main possibilities I'm going to be watching. We have this blue slanted line right here. If you guys remember, this is going to be the major, or at least it was the major resistance on the S&P 500 over the last year. We actually only broke it one time in December before coming right back down. So I believe we're going to be testing this. And I'm calling this out because if we break below 400, we're going to likely test this trend line. And there's a good chance we might try to bounce off of it because previous resistance becomes support. And I'm saying this because I don't believe this whole bounce off of it and us like staying above it is going to last forever, but there could be a fake move where they try to trick so many people. So what could happen is we come to test this trend line, we kind of bounce off of it a bit like this, then going into the FOMC day or maybe the day before, we have like lots of choppy price action is crazy, and we have one last push to fill this gap, just like this, back to like 406, one last push. And by the way, if we touch the trend line back here, it's going to be around like 397 to 396, but I think we could get one last push and form a slanted head and shoulders, and then the market might get a big rejection the same day on FOMC day. And I think Powell might rug pull us pretty hard, in my opinion. I say this because the Fed is incentivized to be more hawkish. The bearish divergences I've been talking about on SPY are suggesting that that is what's likely going to come. There are many signals out there suggesting it. And also, if you look at implied volatility and other things like that, it all tells the same story. So it's very likely the market might start to come down pretty hard after Powell speaks, and then the next day and etc. we continue to see major selling. And at the very least, I do see us coming back to the 380s, maybe even much lower, like for the pretty short term. And then a little bit longer term, maybe over the next few weeks, we could continue to downtrend into much lower levels. But I'm not too focused about the medium term, more towards like the short term. I do think we might see a formation like this. Whether this happens or not, I'm not too worried about that, because I believe the ultimate end game, the ultimate end goal after FOMC is more selling off. That's what I believe. That's what my indicators are telling me. And I'm saying this because you don't have to worry too much about this fake rally, because if you're convinced and you're prepared for the big potential sell which is likely going to come soon, this won't necessarily phase you, and that's why you have to be prepared. Another possibility is the market might, if we're going to form like a very flat stationary head and shoulders, we could sell off to about 393 tomorrow. If that happens, okay, I'm going to be watching to see if we could get right back above this trend line, because if we do, then our potential to rebound is going to go down, and we may only rebound to about like 402 or so before we continue to sell off into FOMC. There are two main possibilities, right? So in order for this to happen, tomorrow watch and see if SPY breaks below 400. If that happens, then I'm going to watch the trend line. If that breaks below that, then we could be forming a flat head and shoulders if we get the rebound. But if we bounce off the trend line, then it could be a slanted head and shoulders with a higher rebound, maybe going into FOMC as we approach the meeting. One last fake out rally to get everyone excited, to get, trick people. And I think that's what's likely going to happen, right? Let me make the color of this blue so I could refer to this as the blue line. I'm saying this because what's going to happen is if the market and lots of retail investors are watching this, they're going to see, oh, the market's coming down and we bounce off the major previous resistance, which is now support. That's a sign of strength. And people are going to be loading up on calls. They're going to be so excited that they're going to think the market's going to explode. Imagine SPY starts pushing up going into FOMC. It could be a huge trap because when people start buying all these calls, they get bullish, then all of a sudden a huge rug pull, it would actually benefit the market makers. That's how they make a lot of money. It's their tricks. So I'm just warning you about this possibility. I think it's very possible. If this doesn't play out, then what's the ultimate end game? Like I said, major selling in my opinion. Now, I'm going to quickly just try to be a little fast about this because I did take up a lot of time, but the VIX has this big gap, okay? This is the implied volatility of the S&P 500. It is dictated by the S&P 500. Got to clarify that. But the thing about it is, this thing is likely going to respect an uptrend, in my opinion. It's going to start pushing up as time goes on, but it could come down to fill this gap one last time, maybe during part of tomorrow, maybe by FOMC day, it comes down one last time to fill the gap, and then this thing just explodes like a rocket as the market comes down, right? This is because SPYs in the S&P 500's implied volatility will start to increase as this thing starts to drop really hard. I also believe that the VIX already bottomed. I think this is our bottom right here, 17.97, and I do believe this thing is set for a more consistent trend to the upside as time goes on. The dollar index was also green today, so it's finally starting to act like normal. This thing is at 102. On the weekly time frame, we have this falling wedge, and it's starting to look like it wants to break out of this. Maybe the Fed says something, they're tightening of financial conditions, causes the VIX to push up, not the VIX, the both the VIX and also the dollar index to push up. That's very possible, and that would be bearish for the stock market if this thing continues to push up, which it most likely will, in my opinion. And then also the 10-year treasury yield is suggesting the same thing. Notice how it has this like double bottom. It's almost forming a W. And I mentioned to you guys, the moment it bounced off this, I was telling you, this thing might start to respect an uptrend. And so far, it's starting to trend to the upside. If it keeps going up like this, it starts filling these gaps. This would be bearish for SPY, for Tesla, and the overall market. Also, on the QQQ, this thing looks like it topped at 298. It's coming down a little bit harder than the market, and now tech is getting hit kind of hard. Uh, I think we have a gap down here. Let me double check that for you guys. There might be a gap down in the high 280s. We might try to fill that gap first before rebounding. Yes, I think there is one. So we might come down to fill this gap. I think Tesla might come down to a little bit more, and then we might get a big bounce, maybe at the end of the day tomorrow, or maybe we kind of hold up tomorrow and then we get a big bounce on FOMC day. We push up in the very beginning of the day, then Powell speaks, and then the market just gets rug pulled and we come down very hard, right? That's the move I think is likely going to come. And for Tesla now, I believe all of this price action could dictate the way this thing moves. So I want to note that Tesla has this gap down here around this 160 area. I wouldn't be surprised if the market continues selling because I didn't say we're just going to rally immediately. If you look at this line I drew out, it looks like there might be a little bit of downside to come, whether we bounce off the previous resistance, which is now support on SPY, or if we bounce at a lower level. Ultimately, we might come down a little bit more and then get a bounce. Maybe the bounce will come. There's no guarantee, but I'm just saying it's very possible. And then it's a fake out bounce, and then we continue selling. But here's my main point. Okay, I know I'm saying all this, but I'm not too worried about this move. See the highlighted area? You guys can just ignore that. The ultimate piece of data, the ultimate move is a big sell-off after FOMC. I know the volatility is crazy. I just want to make that clear. I'm not as worried about this. I do believe the ultimate move will be bearish. But here's what I'm seeing on Tesla, okay? If the market performs that way, it's very likely Tesla's going to come down and fill this gap down here, this 160 gap, right? And it's not just Tesla, the whole market might end up selling off like this. And we might see the market start to rebound. So Tesla might try to trade kind of sideways. And I don't know if we're going to go much lower than that and then bounce, or how this will play out, but I'm trying to eye a potential rebound going into like the very beginning of FOMC. So maybe a small rebound back to the 170s. I don't know how big it's going to be on Tesla. It could be even more dramatic. They could even like pop this thing up to like 172. Who knows? But I think it's very possible for there to be this fake kind of like rally just to get so many people into the options chains so the market makers profit off of them. And then Powell starts speaking, Powell starts to become hawkish. I don't know if the Fed is going to give us 50 basis points. If they do, then we could just sell off from there. But if they give us like 25, maybe that causes the market to pop initially. And then all of a sudden, a little bit later, Powell ends up speaking and then the market just comes down. So that's very possible. Maybe we get 25 basis points and the market just rallies off of it in the very beginning. And then Powell comes out and he just pulls the rug and the entire market collapses and starts coming down. And maybe going into FOMC, maybe a little bit afterwards, this sell off continues. I believe it most likely will. And I did make previous videos with other technical indicators about it. I'm not going to go over everything in this video, but there are many indicators suggesting the market has more downside to come. And I do believe that's most likely going to happen. What else could happen is maybe the rebound is small on Tesla and we're just forming a giant like head and shoulders, but ultimately this big gap down here could get filled pretty soon on Tesla if the whole market gets rug pulled hard, especially after Apple's earnings. If Apple comes down hard, if big tech starts dragging the market down, Tesla could get dragged down too. And so you have to start watching these gaps. Okay. So I do believe ultimately there might be more selling off to come. I would just want everyone to be prepared for that. Before Tesla likely sells off, before the sell off, there could be one last fake out rally to trick people. So I want you all to be prepared for that. The market could be very convincing sometimes. Please be prepared. Anyways, I want to thank you all so much for listening. Have an absolutely incredible rest of the day. I don't know exactly when this whole like fake out rally will come. It's most likely going to come either on Tuesday or maybe early on Wednesday. So be ready for it just in case this does end up happening. And if it does, be super, super careful because truly no one can guarantee anything. But what I could tell you is what Powell says, I guarantee you this, it will cause a big move in the market because the market will react to what he says. All right. Thank you all for listening. Have an absolutely incredible rest of the day. I can't promise you the market will rally or crash. I think we will most likely have a big drop very soon. But I will tell you one thing. When Powell speaks, expect lots of volatility. He's going to be speaking a few hours into the trading day on Wednesday. Thank you for listening. Have a great day, guys. Be ready. Tesla to the moon because the long-term future is still very bright. And peace out.